Hey everyone, this is Kirk here again at Option Alpha. This is the members only video update for Tuesday, May 29th. So we're getting close to the end of the month here at May, and we wanted to go over everything that we have currently on the books for June. So May is already well behind us with expiration. Everything went well. What we had on expired profitably, so no harm, no foul. Had some cash, obviously, heading into May, which was much needed and allowed us to do hopefully very well in June. So we've got a pretty full portfolio here for June. I don't think I'm going to be adding anything here with 16, 17 days to go. So we'll start actually adding July this week. Definitely leave your, sorry about the call there. Definitely leave your cash available for July positions. One of the things I want to take a look at here tonight, just for members, is a quick rundown of all the technical indicators. And this is something that I had actually posted on one of the trading alerts last week, and how everything was just, or maybe it was another video, but everything was just strong sell, 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 sell. And it's funny how quickly things can turn around. So we've just had a couple days here where things have really turned the corner, and we've had some consistent closes and rallies into the end, and we're starting to see a lot more buy indicators across the board, and really everything from the Nasdaq 100 to the S&P to the Dow, which is the US 30, all of them are signaling some strong buying opportunities. So whether there's a short-term buy or a long-term buy, that's obviously yet to be seen. I think it's definitely a short-term buying opportunity. I think we'll continue to rally here for the next week or so, because we've got some excess room to work off, and so we'll get right into that as well. So if we head on over to the charts, before we get into the actual profit charts, this is the intraday of the E-mini futures. And if you remember from a couple of my last videos and updates, I had said that what was really tough about the market heading into the better part of really May is that it would rally during the day and then it would close low. It would just really kind of not hold that rally into the close. But what we've actually seen is kind of the reverse opposite, and this is what really leads me to believe that we've got these late buyers coming in and we're being supported at the end of the day. Instead of just falling off a cliff and kind of rolling out of bed at the end of the day, you have things like this where the market falls during the morning, but then it rallies into the close. And you can see it happened again last week a couple times, rally into the close. We didn't rally into the weekend because it was just kind of boring. But again, today we had a day where we kind of fell a little bit midday, but we rallied strong right into the close. So instead of seeing the market kind of, rally in the morning and then fall in the afternoon, now we're starting to see, sellers come in the morning, but more buyers come in the afternoon and kind of rally into the close. So really that's what we like to see. That kind of, again, signals that there could be at least a short-term bottom in place. If you look at the actual charts, like the Russell, on the Russell, we have an 830 call spread up here, and that's our first strike up at 830, so that's where I have it on my chart. You can see that this head and shoulders pattern has got a long way to go as far as a target. Now, this pink area, a lot of people have questions. This isn't my target for how long it's going to take. This is just how long it could, or how far down it could eventually move. So we've still got a long way to go if this head and shoulders pattern still holds true. But what I want to just focus on is just the retracement that we've seen just recently, where we've had an overextension and we've retraced back up to that previous area of resistance. Again, how great these technicals are, just classic support and resistance trading, that we've made a move down and we've retraced almost about halfway of that move. We got a little bit more to go, probably up to around 790 or so. And then it'll really see if this is going to hold, right? If this new downtrend we're starting to make, if that's going to continue to be the prevailing trend, and all the technicals kind of flip back over and we get back into sell mode. So for right now, it looks like there's definitely some more room. We've had a lot of strong momentum off of the bottom, and we definitely could see that continue here for the next couple weeks. Taking a look at the S&P, again, same thing. Really, we've got 1500 here as a put spread, so that's obviously doing well with the market rallying. Kind of 1410 is the relative area for the RUT trade as well. So again, we've hit that target that I had here on here before, kind of hit it right on the head as far as a long-term support and resistance range around 1300, and now we're moving nicely off of that level. You'll see that we've got a little bit more room to go here on the S&P. We can kind of fill this gap right here up to about 1350, and then we start getting into some really tough overhead resistance. So on the S&P, there's definitely a little bit more room. The Russell, we're kind of almost there, about 20 points away. Here we're about 20 points away as well on the S&P. So let's jump over to one more chart I want to take a look at here, obviously, tonight, is crude oil and, more importantly, USO. I guess looking at crude through USO. Crude oil has actually been pretty much a no trade for the better part of the year. Really, since December, January, it's basically traded in a $6 range. But right now, it's actually looking like a pretty good trade to put on as far as possibly a long trade, a call spread, if you want to play it directionally, or taking a look at some of these puts below here around 30, 29, 28. If you can actually get the fills, these actually might be a pretty good trade. It's at pretty much the lows for the last 2.5 years now. So we're at pretty good lows, and we've also seen a really strong sell-off, and the market's starting to again rebound into the close. You can see that we're starting to show lower tails on the candlestick charts, which is obviously really great to show that we're starting to find some bottoms where it's bouncing off the bottom intraday. So it's not just red, 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 red. We're starting to see some buyers come back into the market. I'd like to see USO at least make a break and kind of really reverse the trend. We haven't really reversed the trend just yet. We're kind of still in that downtrend mode right now. So one more day where we can have a solid up day, a move above 35 would definitely get me interested in playing this directionally, or at least playing it on the put spread side. So I just wanted to point that out with the charts. The last chart I just wanted to take a look at here tonight is gold. I've had a lot of emails about gold. It's hit my targets for these channels pretty perfectly again. So from here, it looks like the next best move that gold can make is to go back up and retrace this channel. I've had these channels on here for a long, long, long time. Like 2 years now, I've been looking at these channels on gold, and posted them many times in the members area and on the blog. So after it made the break back here in April, the next move was down here to this channel line. Now it looks like we're going to make that retracement back up and retest that area of prior resistance or prior support, now going to act as resistance. If we break below this level, then we've got a lot of running to do because there's really nothing holding it below that level. These channels kind of extend for the last couple of years, but after that, we're looking at prices down in the 130s and 120s. So let's hope that gold doesn't break that level and that it continues to stay up here and at least rally up near 165, 170. So if you're playing gold, that's how I play it. I play it very cautiously on the bearish side. If you're playing with put spreads, I would definitely have them very far out, 125, 120 at the least. I think 130, 135 is going to be too close. And then if you're playing it on the call spread side, or at least directionally, I think we could definitely get back up into the 165, 170 range by July or August. So hopefully that helps out with some other supplemental trades. So like I said, to close out the video here, had a real good month of June to add a lot of trades the last couple weeks. We're going to be done with June and start working on July early. And hopefully we continue to get some volatility here in the markets to enter trades. As always, hope you guys enjoy these videos and add your comments or shoot me an email. Happy trading.